Hello, good morning, good day, good evening, uh, viewers. Thank you for coming on this broadcast. Hope you've been having a lovely trading week. So I'm here to give you like a midweek review of what's going on in the markets. So far so good. It's been a boring week, not because the bulls are not bouncing back, but because it's been pretty choppy at the moment. Volume has been practically dead. The bears are still looking shy in my opinion. I've expected them to mount a serious challenge, but they seem to be very, very dull. Everything seems to be so slow and gradual at the moment. As you can see from the charts, the bears are unable to muster up a proper retracement challenge after completing four straight red days. Still unable to fully engulf this last bullish engulfing candle. Even after 4 days, they are unable to fully engulf this large bullish engulfing candle. So it's been kind of very boring. This seems to be increasing, gradually increasing, not too significant volume, but so it's been boring, to be honest. In my opinion, I expected them to mount something more serious, at least at this point in time, after 4 days, 4 straight red days. So it's been boring in my opinion. It's been choppy even on an intraday basis, and even on an intraday basis it's been pretty boring. Trying to trade a choppy market is very, very dangerous and boring. Every trader who understands will tell you the same thing, will share the same sentiment. So I would like to I like to look at history, because charts, analyzing charts, is all about analyzing data, past data as well. It includes analyzing past data as well. So I'm going to be looking back to the last retracement. We had something very similar. After 3 days, we had this huge bullish engulfing candle. We had 3 days, 3 straight red days, which the bears were unable to fully engulf and retrace this bullish engulfing candle. It took them till the 4th day for them to do that, after which we had this that was like the end of the mini bearish retracement run, and then we had this new impulse run to the upside. So we're currently having something similar as it stands now. This time around, the bears even look more scared and shy, in my opinion, because this is 4 straight days. Like I said before, they're still unable to fully engulf and retrace this mighty bullish engulfing candle. And then you can see there's also a steady gradual increase in volume as well. That was also the case in this last retracement. And you can see the volume on the final retracement day, red day, was 57.11 BTC, and then here it's very similar volume as well, 57 point, slightly smaller volume, 7.036 BTC. So you can see how slow and boring and shy the bears seem to be. I think they look scared, very scared. I think they know what the bulls are capable of doing. So trying to short at this point is kind of suicidal for bears at this point. considering their last experience with the bulls. The bulls showed them what they are capable of doing by liquidating a whole lot of them within the past few weeks. So I think during this 10 straight day bullish run, it was a crazy period for the bears. So I think they look very scared and shy at the moment. So if you look at the intraday charts, you realize that the bears are beginning to look strong, looking stronger on an intraday basis. Let's head over to the 4-hour and the 1-hour chart as well. Let's take a look. So you can see they are beginning to gain a little bit of strength here. The bulls seem to be holding on fine, with this higher low formations, and the bears finally were able to conquer them with this close. We're looking at a potential double top formation on the 4-hour chart, with the neckline to be around 45. Neckline seems to be around 45,500 or thereabout. Yeah, around here. This seems to be the neckline, so we're unable to break below, close below that neckline. That showed a little bit of resistance and strength from the bulls, and finally they were unable to, after so much choppiness, even on an intraday basis, they were unable to hold on. We had this close below that level at 2000 hours UTC yesterday. So that means that they are beginning to lose strength on an intraday basis. The bulls bears are getting a little bit of strength on an intraday basis. Same sentiment can be shared on the 1-hour charts as well. We had this break below, the close below that level, 45.5k at around 2000 hours ETC on the 1-hour chart as well. So that happened even before then, the 1-hour chart. So we are beginning to gain a little bit of strength on intraday basis. That's 1-hour close below that neckline. Here's the neckline on the daily charts. It seems to be finding support around the base of this, trend line, and the close below that neckline was also confirmed on the daily charts with yesterday's close finally. So after a little bit of struggle and tussle, choppiness, they were able to conquer that neckline as well, even on a daily basis. But they still look, to me they seem to be looking stronger on an intraday basis, but to me they still look shy and weak on an intraday basis, because even after, like I said before, after 4 consecutive red days, we were unable to engulf this huge bullish engulfing pattern. So it's not so encouraging from end on an intraday basis. Still look weak, in my opinion. Excuse me. So like I said, there's this mini double top pattern that is being formed on the daily chart, which I also showed you, forming on an intraday, on the intraday charts, 4-hour charts, and the 1-hour chart as well. Proper ones formed on the 4-hour and the 1-hour chart. So the target for this, with this close below the neckline yesterday, we are expecting a target of around 42.8k downside. So we need to first of all expect some sort of retest today, if that's to be the case today, because the market can decide to invalidate that. The market should retest that and close back above that level. Then we should that should invalidate the pattern, invalidate the downside target, invalidate the whole double top pattern. So, but if that is not the case, then there's a downside target of around 42.8k, which means a revisit to 2.8k. It's a visit to back to the last swing high of around 42.6k. Last swing high of around 42.6k, which is a ton of confluence around that region. 42.6 was the last swing high during this last 10-day bullish run, and then is also in confluence with the 50% retracement of this current bull run, and as well, so there's a ton of confluence around this region. From what is if this I think there will be like some sort of constant bear pressure, which would subsequently validate this double top pattern, and then maybe send prices down to this 42.8 and 6 region, which is in confluence with the 50% retracement of this current bull run, current impulse move, and also the confluence with the fact that this was the last swing high. So there's going to be some sort of serious battle around that region. We could find support around that region, and then there could be bounce up again to the upside. We'll see bounce back to the upside as a result of that. We'll see this, and we'll see this as well. See these as well. So I think this may be the likely scenario, or we could or this, if this is this region, this 42.6k, it's a ton of confluence, is unable to hold as support. If the bears are able to come up with more serious pressure, but they need to come up with more than what they're doing right now. They need to come up with more reinforced volume and pressure to be able to break that region, in my opinion. And if they're able to do that, then we could be headed down south to even 41k, 41.4k, possibly, which is the 61.8% retracement of this impulse move, and then possibly 39.6, and finally to 37.3. So 37.3 is like the final bus stop and the last opportunity for the bulls to bounce back up. It'll be their last chance to fully retrace this impulse move and then bounce back up. Anything sub 37.3k, if we go further down south, then it means the bears are fully back in control. We could be headed down, further down south to even the 30k territory, as we can see here. So basically that is the midweek roundup for me today. I just hope that I didn't end up confusing you. I hope I was able to give you value, and if you got value from this, please feel free to leave a comment section, and leave a like, drop a like, share, subscribe as well, or follow whatever platform you're going to be seeing this from. So thank you very much. I wish you a lovely and safe trading week. So as it stands now, the market still seems choppy. My advice, which may not be financial advice, is to stay put, stay out of the market, sit on your hands, and wait for it to give us a clear direction before you come back in, because it seems very choppy at the moment, both intra and intraday basis. So thank you very much. Always remember that, as usual, everything I'm presenting here is for educational purpose and not for financial advice, not to be seen as financial advice. Trading is a risky affair. Trading of financial instruments is a risky affair, and you should always endeavor to carry out your own research before entering into any trade. So thank you very much. I wish you a lovely trading day and week. Bye bye.